Good morning. Had a couple little technical glitches this morning, so trying to get things rearranged and set up right. So bear with me just a second. How's everybody doing? Well, I'm doing that. I think actually maybe I'm a little further than I thought. Awesome. Good to see you, Brenda. How's everybody? You're doing well. Katie just left. I thought she was going to come over and say hi to you. And then she decided not to. So I know she'll probably come in here at some point in the next hour, I'm sure. So she just can't seem to get away. She'll probably come try to drink my water again. She's been doing that a lot lately. So, well, welcome to Trading Coaches Playbook. Good morning, Helen. Good to see you all. Got a half a cup of coffee left. It's number 3.5. So let's get the disclaimer out of the way. Actually, we're gonna have a lot of fun. I'm gonna have a lot of fun today. At least I hope you'll join me. But I'm not a registered broker-dealer investment advisor. I'm not going to give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. Anybody enjoying the market right now? For those of you that are bulls, you're like, I hate this. For those of us that are bears, woo, right? Realistically, we should be on both sides of the fence at the right time. I've been mostly on the bear side of the fence for the better part of the last 2 years. So this year has not been as kind to me as last year was, but it's still okay. So it's like everything. And I use this for those of you that are in Weekly Whispers or Patterns in a Flash. I often talk about it. And, I use baseball as an analogy, any sport you could, but sometimes you have great years and other years, you're in a slump. Sometimes you go through periods that are good and other periods are bad. You have good days, bad days, right? Good weeks, bad weeks, good months, bad months, good years, bad years. It's like that in everything, right? So it's one of those things in trading that you have to get used to. And, and I go through these cycles in my mind of different things. And one thing I see a lot of people asking when they're getting started, especially, is like, can I make, X number of dollars per month? And I've realized now that question right there is a blatant indication of an employee mindset. And with that kind of thought process, you're likely to struggle in the market. Why? Because if you need a consistent paycheck every single month, then your mindset isn't in the right place to be really in any business. Because I don't care what business, if you start any business, whether it's trading or real estate or a retail front or an online store or a coaching, anything you do, the income is not consistent. That's what jobs provide, right? So if you're in that mindset that that's what you want, that's what you need, then yeah, you get a W-2 employment situation, right? If you are, there you go, Brenda. Because business is inconsistent and trading's the same way. I see people all the time, in these Facebook groups. Can I make $10,000 a month? Sure. If you have enough cash to draw off of every month. In other words, in any business, you have to build the business to a point where you have enough reserves. If you want a consistent, steady cash flow every month and you want a paycheck, you have to build the business to a point where there's enough cash there where you can start drawing on it consistently every single month. That's the only way you're going to create a consistent cash flow in any business. And this business is no different. You're going to have months where you make money. You're going to have months where you lose money. It's just the reality of it, right? It's cycles. It's up and down. It's just one of those things you have to get used to. So anyway, that's been on the front of my mind a lot lately for some reason. So I think it's an important distinction to understand. So, and maybe it's because the last 2 or 3 months I've been mostly on the sidelines, and just in the last month I've started to get back into and load up on some trades. So it's kind of, you just sit there for a few months doing very little or almost nothing, and you're not really creating a consistent cash flow. So you're living off of the reserves that you have, right? So just is what it is. But here's what's coming up in the next little bit. I'm gonna get off that soapbox. There you go. So the online, the inner circle is coming up the 25th and October 2nd, 7 o'clock. Mastermind, September 26th and October 3rd. SPX Cash Flow Secrets, the 27th. Trading You is the 28th. What is it? That's next week, huh? Yeah, I believe that's on my calendar. I'm doing it next week. So I always have fun doing. Oh well, I do. I love doing all this stuff. So it's just a lot of fun for me. Free online workshops, Power Hour every Monday at noon, and then this one every Friday at noon. And then Power Option plays every Tuesday and Saturday. Cover Call Explorer on Thursday. E-mini Think Tank Monday, Wednesday, Thursday. And Vegas Spread Master with Sean Monday, Tuesday, and Friday. And then you can follow us on all the social media outlets. And then there's all the stuff that I have. I know many of you have either been through it or you have it currently. Patterns in Flash, which I'll show you a little bit today, but we're going to talk all about patterns today, pretty much, which is usually all I talk about anyway. Patterns and psychology. Those are the two things I love about trading. And then Weekly Whispers and Small Accounts, Big Returns. So if you haven't had Patterns in Flash, you're going to hear a lot about it today because we're going to see some stuff that will possibly flush you like it did me when I started. So, but Head and Shoulders, that's what we're going to talk about today. You probably saw the email and how to play it, but there's the question: why now? I'm assuming you all see that pattern. It's pretty obvious, right? But why are we talking about Head and Shoulders now? I many of you, I see a lot of familiar names. You all know that Head and Shoulders is my favorite pattern, probably, right? There's another one, right? Well, here's the interesting part. That first one we looked at, this one right here, look at that pattern real close. See that pattern? It's the same pattern. That's 2008. See that pattern right there? That's yesterday. That's why now. We are literally just broke the neckline on the SPX yesterday. We didn't just break it. We broke it in a big way. Now, does that mean anything at this point? No, not really. It just means we formed a Head and Shoulders, which for those of you in Weekly Whispers, you've been watching this for 2 or 3 weeks play out and form. Because when you've been through Patterns of Flash, you've trained your eyes to see the patterns as they form, so you are prepared for this when it happens, or if it happens, I should say. So here's the part that gets even more interesting, in my opinion, is there's a picture of all 4 markets: the SPX, the Dow, the NASDAQ, and the Russell. All 4 of them are in Head and Shoulders pattern. Russell's not quite as pretty. It's not as nice looking a pattern, but it's there. See those? Here's the funny part. There's the first ones. That's 2008. See, I did that to confuse you, Brenda, intentionally. That one right there, that one right there, those are the same. That's 2008. That's yesterday. That's yesterday. We had the exact same situation, or not exact same, but similar, very similar situation in 2008 before the real estate bubble. The market gave us a clue that it was getting weak. Did we know why? Not necessarily. It's not easy for us as individual traders without access to some of the deeper information that's maybe out there that some of the hedge funds have, maybe some inside information, if you will. We can still see a lot of it, right? We have access to tons of it. But we don't necessarily need to see it. Because here's the beauty of patterns. Not only just technical analysis in general, but patterns specifically, is they are a visual representation of the underlying feelings of people trading that particular stock, or in this case, we're looking at indexes. So it shows you visually on the surface, in a superficial way, what the emotions of the traders are. And this is a representation, this pattern itself, which we'll get into in a minute, is an indication that the bulls have lost their mojo, right? They're not feeling as good anymore. They were feeling good just a couple months ago, but they've lost their steam. And I thought it was interesting that we have 2008, all 4 markets were doing virtually the same thing. And we have the exact same thing happening right now in the major markets, except, actually, I take that back. It's not exactly the same because the Russell was actually in an uptrend at that point. The Russell now The Russell has actually, you can see, and we'll go look at live charts in a minute, and we'll get it updated, Brenda, since you're going to be OCD. That's worse than me. Yeah, we'll get it streaming here when we get to the actual charts, but I want to make sure we have the foundation that's there, that's important to understand why this is such a big deal. And frankly, every time I do a Trading Coaches Playbook, a few days or a week in advance, somebody on the team always emails me and says, what topic do you want to cover? And usually I have to think for a little bit, like, what do I want to cover? What do I want to touch on? And what's important, what's relevant right now? When I got that email a few days ago, I didn't have to think about it. It was instant. This is the topic. And I'd forgotten, because I've looked back at the 08, mostly just at the SPX, but I didn't look at all four of the markets. I didn't look at these and realize that all four of them were in a head and shoulders at that time. So when I went back and looked for this and snagged these pictures, I was like, okay, cool. They were all in there. And it's very similar. Except, again, the Russell has been sideways, not in an uptrend. Which, if you don't know, and I know I've hit this a lot lately, so if it's repetitious for some of you, that's good. That's what it's about, right? The Russell is the 2,000 small caps. So they're the little companies. And I'm going to guess that most of you have probably been around long enough that you've heard it said when the economic news comes out, especially when we're in a recession and people are, all the politicians are saying this and that. Oh, the small businesses, we need to help the small businesses. They bring us out of a recession. I can't remember how many times I heard that, because I started right at 2000 at the very peak of the dot-com bubble. And a year after things crashed, that's what all the talk was. Right? We need to help small businesses. Well, if small businesses bring us out of a recession, then the inverse of that is true as well. They lead us into. And this is why back in 21, for those of you that were in Patterns of Flash, we were talking about it on a regular basis. In 21, the beginning of 21 is when the crash actually started. It just didn't appear in the major markets because the big companies, the FANGs, right? The Facebook, the Apples, the Googles, the Netflix, they were still doing okay. But Peloton rings a bell. It was January or February of 21. And I remember because it was at $175. It was in a head and shoulders pattern. And it broke. I jumped on the trade and killed it with that trade. That's why it sticks so well. It was probably one of the better trades. Well, it wasn't the best trade I had that year, but it was one of the better ones. It was a beautiful textbook head and shoulders pattern, and it played out beautifully and quick. They don't always play out that nice. That's why I remember, usually, you have those home runs that are just like, they just stick in your mind. Tesla and D-Dog were two of the other ones that I loved that year. But the smaller companies like Peloton, right? They're not an Apple or a Google. They're a little tiny company. They started to get crushed. If you go back and look at those smaller companies in 21, they started to move down. By the end of 21, Peloton was at 20 or 30 bucks. I don't even know what it's at now, 10 bucks or something. It was 10 bucks last I saw it. I don't even pay attention to it anymore. I don't even know if I have it on my list anymore. Oh, I do. Oh, it's $4.50. It's even worse. Wow. That's crazy. Where was I going? That just kind of threw me for a loop. Will they even stay around? They'll get bought out by somebody probably, or they'll go completely under, which I would imagine somebody. They've got a model there that I think works. It's just a matter of doing it at a scale that is profitable. Going back to the Russell. So I think from a big picture perspective, on a short-term basis, it doesn't work as well. But on a larger scale, on the macro picture, the Russell gives us an indication of the health of the small businesses. And if small businesses, and that's why in 21, I started to get more and more bearish, because the Russell was going sideways. The SPX, the Dow, the NASDAQ, which are heavily weighted with the FANG stocks, right? Facebook, Apple, Google, Netflix. Those, I don't know what the percentages are, and they're out there somewhere. But 5 or 10 stocks in the NASDAQ make up 25 or 30% of the index itself. So if those 5 or 6 stocks are doing well and still pushing north, the whole index looks like it's doing okay, because it makes up the bulk of it, right? But those companies are the huge aircraft carriers out in the ocean. And when a minor storm comes in, it's no big deal. They can weather it. The little rowboat out there, whoo, storm, any storm, I'm out of here. And only when a giant storm hits does the aircraft carrier say, okay, we got to get out of here now. Right. So you saw the Russell just going sideways pretty much all of 21. It broke out, I think in September, October, it broke north just for a brief time for a week or two. And I remember that because I remember thinking, I just don't believe this breakout. It was just something in my gut. Just something didn't seem right. And sure enough, a week or two later, it's back in that range. And then January hit, and that's when the market started to head south. And the big companies then started to sell off. So the Russell, from a big picture perspective, I think is a great indication, gives us a better picture of the health of the underlying economy, because it is the small companies, which represents what, 85% of the businesses in the US. 85% make up are small businesses. And those are the ones in the Russell. So that's one reason that I follow it so closely now. So it was a great predictor of what was going to happen in 22, or what may happen, I should say. I didn't know. You never know for certain, right? Kind of, right? We know historically that these things are going to happen. You know there's going to be crashes. It's always happened throughout history. The question is, when does it happen? It's not a matter of if, but when. So the question is not whether or not this market's going to hold up and stay bullish, or if it's going to turn bearish again. The question is, when does it crash? Because it's going to happen at some point. I just had a thought that I thought was important, but it'll come back to me maybe. But some of you remember 08. It was probably painful for you, right? Probably was not the most pleasant experience. Your retirement accounts got cut in half. But what if instead, this time you're prepared and you see what's developing literally as we speak, and you can not only avoid the pain of suffering massive losses, but actually profit from the drop, right? So now we're just going to go nuts and bolts here, and then we'll go over and spend the rest of the time playing on the charts. So Head and Shoulders is just the core, okay? And if you, for those of you who've been through Patterns and Flash, you've seen this. If you haven't been through Patterns and Flash, you need it. I'm just going to flat out say it. Because of what we're dealing with, not only what we're dealing with right now, but I'll show you in a little bit. I've got a whole bunch of charts with patterns that I'll show you. So the market's in an uptrend, right? You got rising volume. You can see down there at the bottom, kind of, it's a little bit shaded by the little logo there, but so we're in a bullish uptrend, right? And you get a move from 0.4 upward, right? And an uptrend is what? How do we define an uptrend? You all should know this by now, right? Higher highs, higher lows. You got higher highs, higher lows, right? 0.3 is higher than 0.1. 0.4 is higher than 0.2. Higher highs, higher lows. It rallies from 0.4, right? It comes back, retests one. We got a roll reversal, rallies up, breaks out to a new high. And the textbook, and again, this is the textbook way to look at the Head and Shoulders. We don't, they always play out differently. Do they have to be perfect? No. But again, we're showing you just textbook. So on this rally, we get lighter volume. That's what we want to see. Why? Because the bulls are in full control here. If the volume gets lighter and it moves up, what does that tell us? Right? Light volume on an up move is actually bearish, because the bulls don't have as much excitement. They don't have as much energy, right? The party's cooling off. You know, all the cool people are leaving the party. And so less people are showing up. Whatever analogy you want to use, right? So the volume gets lighter from 0.4 to 0.5. Then it pulls back again. And the fact that we broke the previous high from here, see from here up to 0.1, we pull back to 0.2, rally to 0.3, pull back to 0.4. As long as we don't break this high below it, then we're still clearly in a bullish trend. Higher highs, higher lows. Yeah? You get a roll reversal. Here, this time we break down below the previous high. Technically, the market should have found support right there. Excuse me. But it didn't. It broke below that. That's the first red flag. The light, well, I guess it's the second. The light volume on the bullish rally is the first red flag. The second red flag is we don't hold this previous high. And then, of course, it bounces from 0.6 to 0.7. Once again, we get even lighter volume. So the bulls have lost even more steam. They're less excited about this rally than they were this one, which they were less excited about this rally than they were this one. So the bulls are getting worn out. Then, of course, it drops off from there. Now you've got the formation of the Head and Shoulders. You got the left shoulder, the head, the right shoulder. Now, do you trade it now? No. unless you like getting your head handed to you, pun intended. Now we can draw what's called the neckline, right? And if you think of your own physical body, it's right here. You got the head, the shoulders, right there. You chop the neck off, right? That sounds terrible. But if you draw from this trough to this trough, you get the neckline. Now, again, we still have just a pattern that is formed. This neckline at this moment is still support. This is why I say do not trade this here. You could. It'd be super aggressive and a little bit crazy, but I've done it a few times. I've done it actually a lot of times. And the vast majority of the times, what has happened when I do get into a trade here is it finds this as support and bounces and rallies. And the head and shoulders gets negated, and I take a loss. I've done that many times. And then I realized it's like, and I knew this early on, but you want to wait for confirmation. You don't have to, but you're taking a risk that uses it as support. So what we really want to see is a break of the neckline. We want to see this thing cross down below the neckline. That tells us that, okay, this is not support anymore. It was acting as support, but now it's not. It's broken that support. And ideally, what we want to see is heavy volume on the break. You see, we got lighter volume on each bullish move. So the bulls got less and less strength. They got weaker and weaker as the pattern forms. And then the bears come in with a vengeance and say, all right, we're taking this thing over. And you get preferably a big spike in volume. It's not necessary. It's preferred, right? Now, I don't have time to go to the inverted, but on an inverted head and shoulders, which is literally flipping this over, heavy volume on the breakout to the upside is significantly more important. Some of you are asking, why is that? Doesn't make any sense. Why would it matter on the upside? Well, because what happens for a stock for a stock to need to fall? Well, you get sellers coming in, right? Right? If you have demand, a stock goes higher. If demand is stronger than supply, the stock goes higher. If there's more supply, sellers, then it goes down, right? If the supply is heavier than the demand. But what happens if there's just no demand? Then it naturally goes down. There doesn't necessarily even have to be an abundance of supply, but if there's no demand, it just falls by its own weight. It's like taking a boulder and pushing. You push a boulder up a hill, right? Just roll it up a hill. You got to push it. You got to work to get it up there, right? If you step out of the way and let go of that boulder, what happens? Gravity just takes it down. Nobody has to push it. It goes all by itself. Same thing with stocks. If nobody's there to buy it and there's no demand there to come in and push that boulder up the hill, it's going to fall by its own weight. So you don't have to have an abundance of supply. That's why it's not as critical on the top. But on the bottom, in an inverted head and shoulders, there has to be somebody there pushing it higher. And if there's not heavy volume, it's very suspect. Could be a false breakout. And then we get a retracement. Again, not always, but again, this is textbook, right? What we want to see is a retracement back to the neckline, test the neckline, and then roll back over. And obviously, you'd like to see heavier volume here as it rolls over. Because now it shows, the bulls came back in and bought a little bit up. It could be maybe somebody shorted it up here and they're covering it down here. And then they reshort it here and it starts to fall, right? So this is a textbook head and shoulders. That's what we want to see in a perfect situation. Very rarely do you actually get that, right? And then we have what's called a measured move, right? For those of you who aren't familiar with this pattern. So you measure from the head to the neckline, and whatever that distance is about what we expect it to move down. So it's a target, if you will. And it will blow your mind how often, even after 23 years, it still blows my mind when I see these and it's like, it goes to hits the target and turns around. It's just mind-boggling. It kind of gives me goosebumps. It's a little bit weird, but it's just crazy when you see it. You want to see it? Let's go look at it. Okay, here we go, Brenda. I'm going to turn this on. I forgot I didn't have the streaming turned on. This thing crashed on me. I was going through a bunch of charts as I was just a few minutes before we started, and then it crashed. That's why I had to restart it and do a bunch. It's like, where'd we go? There we go. No, that's not it. There we go. So this is the whole bunch of examples I pulled out for things that have happened. And this is an ugly one, right? This is where you don't get a textbook pattern, AI, which I think AI is, I think it's way overblown. I think it's the whole .com bubble playing out again. And a lot of people are all excited about AI, and there's companies, Pinterest has popped a couple times in the last few days because they implemented some new AI stuff. And when I type in the in my my text and I spell it right, THE, and it changes it by default, artificial intelligence changes to TYR, which isn't even a real word. Yeah, that tells me that AI is a little bit overblown. You type in but, like, hey, I'm going to be there, but I might be a few minutes late, and it changes to bit. It's just crazy. It's like it's made things worse, which is mind-boggling to me. I used to have the autocorrect thing on it, and it corrected it accurately a year ago, 2 years ago. Now with AI, it corrects correctly. It changes correctly spelled words to incorrectly spelled words. That's part of the reason. I know it's anecdotal and it's probably stupid and superficial. But my goodness, if they can't get the texting right, how are you going to have a self-driving car? I will never trust a self-driving car when you can't even get my text right. It's insane. Anyway, I get a little fired up about some of this stuff. I think at some point, like the .com thing, it was too hyped up in the beginning, and it took 15, 20 years to get 10 years, 20 years to get to where it was really, really what it was made out to be in the beginning. I think AI is probably the same thing. I think it will make dramatic changes for us, but I think it's too early. That's just me. But this is a wonky, not a really good looking Head and Shoulders, but if we look at it in a textbook situation, just like we did, right? You got a big run up, creates the right shoulder. Let me get at the lines, a little easier to see. Big volume, right? Huge volume pushing it into the shoulder. As it runs up to the head here in the middle, the volume gets a little bit lighter. It still had a couple spikes, but it wasn't what it was going into the shoulder, right? And then as it rallies here into the right shoulder, the volume dies off by quite a bit. It wasn't anywhere near what it was here. It's still big if you go back here, but we've got to look at volume on a relative basis. You got to say, okay, what was it relative to recent action? Well, it's getting lighter and lighter. And as the right shoulder formed, and this one took a while to form out, and it's really ugly. It's technically what we would call a complex shoulder, which is basically multiple shoulders, multiple heads. You don't have to get into the semantics of it. It's not that big of a deal. I used to be super OCD. Like today's the 22nd, not the 21st, kind of OCD. That's for you, Brenda. See if you're still paying attention. But I don't worry too much about that a lot of that stuff anymore. Most of it's not that big of a deal. But when it finally came back down here and then it broke the neckline, and again, sometimes it does this, it dances around it. And we had earnings, which made it hard. You can't really trade it. I mean, you could trade it before earnings, but that's a little bit crazy unless you're willing to take that risk. And that's what the gap came from, was earnings. So I know I traded it. We had this little range, and I figured if it broke down, it would probably come down here. So I caught a little piece of this, tried to trade it here. I got stopped out, right? As it broke the neckline, we still had a few weeks before earnings. So I figured we might drop before earnings, but it didn't. It got stopped out. So had a little profit here, a decent little profit here, and then it got stopped out and gave part of it back here. And right now, because the gap down, and we pretty much just danced on this line. So was that 27.5, 28? We danced on this line for a few days, and we finally broke down. Expecting this to possibly come down here to 20. I think, yeah, this is that's what's happening today. It's not real time. It is streaming, but you can see 9:17. We're actually 9:32. It's 15 minutes delayed. So it is ticking with the market, but it's from 15 minutes ago. How many eyes? What did I miss? Uh-oh. I just noticed your comment. I was like, wait a minute, eyes. Some of these are just examples, but you see that pattern? This is a shameless plug for Patterns in a Flash, kind of. There's a double top there, right? There's the double top, but it's already broken down. So obviously you can't trade it at this point. And that's what some of these are. CCJ, there's an example of a Head and Shoulders. Now, this is an example that I wanted to bring up because they don't always play out. And this is an example of why to wait for the break of the neckline. In fact, this is a trade we had set up for the Weekly Whispers, for those that have that. is, we had a little pop. It's not a beautiful head and shoulders. It's actually rather ugly because it's not a very big, it's a tiny little left shoulder, a tiny little head. We have kind of a double top there, even though it's a stretch to call it a double top in my world. And then we got a right shoulder and it comes back down. And this was the trading plan. But okay, if it breaks the neckline and it breaks that 29 area, the entry point's at 28.60, target at 26.45, the next support level. About $2 of potential on $28 stock. That's what, 7, 8, 9%. It's not spectacular, but it's not bad either. But you can see it didn't play out, right? It didn't break the neckline except for just a little tiny bit that one day, and it didn't break the support. If it would have, then it probably would have come down here. But this is why you wait for it to break. And if you're more conservative, you wait for it to break and then come back up and tap the neckline. There's one that's a little more recent. This is, DR Horton. Do we have Pulte? Yeah, Pulte's in here too. Okay. If you pay attention to the real estate market, and I talked to quite a few real estate investors, and some of them on the retail side. I've got some friends that are in commercial, and I'm always picking their brain, trying to get in, anecdotal evidence as to what they're experiencing, what they see, and what they know that's going on, because they have a deeper knowledge than I do about it. And so I always ask him, how are things? And one guy recently he buys the fixer uppers and flips them. He goes, I can see it contracting some and pulling back, but I don't see a crash, which he might be right. And most people that I talk to, they say that because it's based on supply. There's no supply on the market, which is true. And why would there be? If you got a 2 or 3 or 4% interest rate, and you sell your house now, you're going into a 7-8% interest rate. Why would you do that? It doesn't make any sense financially to move when you're going to pay twice as much in interest as you are now. So anybody that has those rates doesn't want to go anywhere. They're not willing to sell and go into a higher mortgage. So in the old days, and for the better part of several decades in real estate, there's the periods like the, early 80s, I think it was, right, when interest rates were crazy high. People really only sold or bought if they needed to, if they didn't have any other options. And we're in a similar situation now. Like, why would you sell? So there's no point in trying to trade up for a higher interest rate. So that's one of the main reasons that there's a lot of, the supply is super tight. But there's a lot of things that could change that. Foreclosures. My neighbor's house is in foreclosure. I don't know why. I didn't really know the guy that well. I don't know why. I thought he was military and he had a military pension, which makes it kind of weird, but I don't know what happened. And I don't care. It's none of my business, but the bank owns his house and they're trying to sell it. It's been sitting there for 3 months now. So if you get more and more of that happening, and a lot of the new home buyers, one thing I've seen some data on it and articles that they are the percentage of their mortgage relative to their income. I think it's at the highest level in history. It used to be 22 or 25%, I think, on average. I don't remember. Don't quote me on the numbers. I don't remember exactly what it was, but it's up to like 28 or 30% or 33%. So the size of the average person's mortgage is a larger percentage of their income than it's been either in a long time or any time in history since we've got data, right? Which isn't necessarily a good thing, because if things continue to contract and people get laid off, you got a 2-income household, at least around here. You get just a starter house, your mortgage is $4,000, $4,500, depending on how much you put down. If you put 20% down, you might be $3,800, $4,000 with the interest rates where they're at. If you don't, you got PMI of $200, $300, $400 a month. Your mortgage is $4,500, $4,700 a month. If you got 2 incomes of, $7,000, $10,000 a month, you got 15, 20 grand coming in. You got a $5,000 mortgage. That's 30% of your income, basically. It's a lot. If one of those 2 people loses their job, 80, 90% of your income is going to a mortgage. And if you got the average car payments now north of $700 a month. So if you have a car payment and a mortgage, not even 2 car payments, but 1 car payment and a mortgage, at least around here, you're $5,000, $6,000 a month just to cover those 2 bills. And then insurance, which is going up, food's crazy, fuel, all your other expenses. I mean, you can see how it could turn into a disaster if more and more people start to get laid off. So, but that's the reason when you look at D.R. Horton, I mean, this thing was $65 a year ago. It's doubled in price because people can't get existing homes, so they're buying new homes. And I think part of this too, I met a gentleman a few months ago that was early 60s. He was going to retire in a couple of years. Said, I'm buying a new house because I don't want to fix things in my retirement days. When I'm on a fixed income, I don't want to be having to pay repairmen to come in and fix things. So he bought a brand new house, which makes sense. The second half of the boomer generation is hitting retirement age. And that makes sense for them. So I don't know how much that contributes to this, but you can see there's a Head and Shoulders on D.R. Horton. Watch this. Home. And these have already broken. So, and the trade's already gone on these, but same pattern. They're home builders. Same thing. You know, it's $38, $40 a year ago. It went up to 80. It's more than doubled. Have they actually doubled their production, doubled their profits? Probably not. So, I mean, these are all-time highs, which to me was mind-boggling. I didn't notice this until just a few months ago. And I'm like, what? Because the real estate market's slow. So how is it new home builders are doubling the price and having record stock prices? Well, some of those are anecdotal reasons, right? There's people buying it. There's no supply of existing homes, so they're buying new houses. EQT, again, here's some examples. You see that pattern? Actually, that could be in numerous different patterns. That could be a Head and Shoulders. You could call it a diamond pattern, which is an indication of a top. And this is where I stop being so OCD. I don't care what the pattern is, but you've also got some very heavy horizontal support there at 42, and boom, it broke. The key is to recognizing it right here on the right side, right? There's another one here. If you look back a few months, y'all see it? Let me make it obvious. That's pretty textbook, actually, at least on a line chart without looking at volume. The pattern, the price pattern itself. There's an inverted Head and Shoulders, right? Either, you know, left shoulder, head, right shoulder, or you could say two left shoulders, two heads, whatever you want to call it, doesn't matter, right? The sentiment is that we've dropped off. We're in a downtrend. The bears are in total control. Bears are in control. Bears are in control. Uh-oh, they don't have quite as much control. The bulls come back in and push it higher. And then there's your textbook breakout, right? That is, I'm going to guess, whoops. So this is a, you know, it doesn't break out huge. That's not a giant breakout. It's 2 big days in a row. It's definitely above the line, but we pull back. That hammer pattern is a great clue that says, okay, that would be a day that you could look at this if you noticed it and you drew it and you did everything here. Excuse me. You could look at this at the end of the day and say, you know what? That's good. It broke out. It's pulled back. We dropped below it during the day, but by the close, right at the close, you're looking at this going, there's a hammer on a breakout. Jump in. You'd get a 1 or 2 day pop. You'd be happy here. Of course, a week and a half later, if you held on, you'd be cranky again. But then you get another hammer pattern down here. Same thing as this at the same place. It closes above it. And maybe you jump in it. You have a stop down here. And then obviously you can see about a month and a half later, you're going to be very happy jumping from 35 to 41. 6 points. That's 15, 18%, almost 20. So this is the beauty of patterns. And this is one of the reasons I love inverted Head and Shoulder, or any Head and Shoulders, top or bottom. But that's just an example again. But once again, you've got to be able to see it. So does the diamond pattern always go south? That's a loaded question. Always, it's like always and never, two things to never say. Right? It is a topping pattern, so the reality is that just the nature of the pattern itself. Yes, I don't know if I've ever seen a diamond pattern at the bottom. They're pretty rare, actually. You don't see them very often, along with the broadening patterns, right? Diamonds are even more rare because this is basically a broadening pattern followed by a symmetrical triangle. You could also call it a Head and Shoulders, right? Left shoulder, head, right shoulder, 2 right shoulders. You could theoretically call it a triple top. It's not textbook, but there's the reality is that you got a bearish pattern. Whichever name you put to it, whatever you label it with, it's still a bearish indication. So, but yeah, for the most part, Gene, a diamond pattern is a topping pattern. Like I said, I don't think I've ever seen one at a bottom. There's probably some out there, but they are pretty rare. Flextronics. This is a Head and Shoulders that kind of played out. It got halfway to the target, but then turned around. So if you would have played this, and several of these that you see already drawn on it, they all came from the Weekly Whispers, right? And this one was one that we got into. I can't remember exactly how I traded it, but this is where scaling comes in handy. This is why I scale like I do, right? If you get into a position here on the break and it gets halfway to the target, what do? How many of you have been in that position where you get into a trade like this, you're halfway to the target, and then boom, a week later, it's turned around and you're upside down. You were profitable. You're up $1,000 here, and you're like, woo, keep going. And then a week later, you're like, I'm upside down 500. And then a few days later, you get stopped out. You take a $1,500 loss, and you're like, I should have gotten out. Shoulda, woulda, shoulda, coulda, right? In almost every type of trade that I get into like this, if we're halfway to the target or close to it, I'm at least taking some of it out. This day right here, I would have either pulled, because once you gap down like this and it rallies back, and we actually have there we go. This is basically a piercing pattern. So as long as it's a candlestick pattern, right, which you should be familiar with it. If it rallies and closes at least halfway into the previous day, that's a reversal pattern, saying that we're likely going the other direction, or at least slowing down. So at the close of this day, you should have been looking at this saying, you know what? We've got a candlestick reversal pattern that is telling us that this stock is either going to go the other direction, or at least the move that we're in is likely to slow down or stop. And in this case, it actually turned on a dime. So Head and Shoulders, beautiful. We're looking for the target, but it didn't quite get there. And I most likely would have, in this morning, this is what I'll often do, especially if you have 4 down days like this and it gaps down, I'm pulling out some of my profit. I'd probably take a third of it, maybe a half of it off the table here. At the close of the day, I'd either tighten the stop up or maybe get out of more. But I love to scale, to get in and out, because now that emotional roller coaster ride that you go on here, where you get in one of these days and you're up $1,000 here, and a week and a half later, you're getting stopped out for 1,500, you're not on that roller coaster ride anymore. If you bank half your profit somewhere on this day, then it comes back up here, and you stop out somewhere in here, maybe you still got a profit. Even if you go and get stopped out at the original stop, but you took half your profit out here, your loss is significantly, it's not 1,500, it's maybe 300. You know what I mean? So scaling is one of those massive things I do to help manage the emotions, especially when you get a move like this and you're partway to your target. If you haven't done that, try it on your next trade. If you have multiple contracts, if it moves in your direction, when it gets partway to the target, take a little piece off and watch how much your emotions change. Watch how better you feel about that position. Now watch, you're going to try that on your next trade, and the stock's going to keep going, and you would have left profit on the table, and you're like, keep trying it, because one of these days it's going to do that right there. And you're going to look back and say, okay, I'm glad I did that. But there's the beauty. You take part of your profit out. If this thing would have kept going to the target, and it would have kept falling, I'm still there. So I'm still making profit. But I'm protecting my backside too. And that's where capital preservation is critical in this business. So it's good to get part of your profits out. If it keeps going, great. Yeah, you're going to leave some profit on the table. So be it. You'll also have the situation where it backs up against you and you'll preserve profit. So Fortinet, what is this? Oh, there we go. There's a symmetrical triangle, right? Another example of a pattern. Most of these are Head and Shoulders, but it didn't quite, I don't think it got all the way there. It didn't quite get all the way to the target, but got close. Thought I turned that off. Let's shut it off real quick. Home Depot. Woo! There's a broadening pattern. This one, we've been watching this in the Weekly Whispers for a few weeks now. Ever since we had this, well, this was earnings. We had these 2 crazy days, right? It formed a double top. We got huge shadows up here, a big giant fight between the bulls and bears. Giant bearish engulfing pattern. Let me zoom in there some more. Giant bearish engulfing pattern where we not only engulfed the previous day, but 1, 2, 3, 4, 5 previous days. And if you've been through patterns of Flash, you know that the more days you engulf and the more volume there is, the heavier and the more significant that pattern is. We get a few days of drop, not a huge follow through, but a little bit. And then the briding pattern forms. It comes back up, taps that upper line, and then rolls over from there, kind of dances around here for a few weeks. We've had this trading plan in place since somewhere around in there, 3-4 weeks ago. Watching it and waiting. And then it came down here. And even if you got in here the first day it triggered the entry point, we're here 2 weeks later now. We're almost at the target. We dropped 20 points in the last 5-6 days. This is the beauty of patterns. Again, they don't always play out beautifully like that, but Keurig, here's a giant head and shoulders that was playing out over a long period of time, over a year, basically, a year and a half. And it finally cracked that neckline. I think that may have been earnings. No, it wasn't. It was just new. There's some kind of news, I'm assuming, to hit this because, that's a giant move for 2 days. But we've rallied back up here, and now it's just dancing sideways. What to do with it? But this was a nice move. It didn't quite get to the target, which was a big target. The longer term they take to play out, just to form, generally speaking, they'll take longer to play out, right? So if you have a big one like this next one, Las Vegas Sands, this one's beautiful. This is my favorite right now. It started, the left shoulder technically formed back in March of last year. Or no, March of this year. So we're 6-8 months, which is what I like to see. You see 6 or 8 months. And we actually started watching this back here. This was the right shoulder that was forming. And it was actually, the neckline was originally right there. So it broke here. I remember pulling the trigger on a trade here and getting stopped out shortly thereafter. I don't think it pulled the trigger here, but we've been watching this thing for a while, right? Since back, this was the right shoulder that was forming. And yeah, there was a trade that triggered here and then got stopped out immediately. And then kept an eye on it, just kept following it because the pattern's still in play. Sometimes we watch them for weeks. And then finally it rolled over, and just several weeks ago, it broke the neckline. And didn't do it in a massive way. We'd like to see good solid volume, but it wasn't huge. And then it rallied back up, and look what it did. It absolutely drilled that line, which you can see this line, the end of that thick red line, that's where I drew it. I didn't move it. Hasn't been touched. Draw it right there. There's the neckline. And a few weeks ago comes up and taps it. I remember nibbling on this. I think it was this day. Took just a small position. This was the trading plan that we put in place, which actually was from back there. Probably should have adjusted it up. Oh, no, I was basing it off of this 53 level, the horizontal support that was dancing on. So the trading plan, the stop was up here based on this. The pattern says we're probably going south. So the stop was based on that horizontal support. I remember nibbling on it this day, just taking a little bit, because that's scaling in, something I love doing too. If you haven't done that, try that. You pick up 1 or 2 or 3 contracts, and then if it does continue to fall, you add to it down here. You're already ahead of the game here, right? You're already up a little bit, maybe not a ton, but a little bit. And then if it does back up, then you've got a little bit of a cushion there. It's harder to do mentally and emotionally to get into that mode where you say, okay, I'm going to buy it here and then I'm going to pay more for it later. It kind of twists your, I know the first few times I did, I'm like, what? How do I do this? And then after you do it for real, all of a sudden you realize this is awesome. It's better than scaling out, in my opinion. It just, you got to shift your mindset. And what I would say, if you haven't done it, do it. Try it and see. You go, okay, this is a little bit early. It's ahead of time, but I'm going to nibble on it. It's no different than going to a strange pool or a body of water, and you don't just dive in without finding out if it's cold or hot, right? You stick your toe in the water. I love to stick my toe in the water. And you go, you know what? Let's find out. Because if this thing keeps going, then I'm going to make even more, right? Because I've got a little position in front of it, which gives me a higher profit potential with less risk. And then if it backs up against me, I don't take as big a hit. It's not that big of a deal. You just run the numbers and go, how much do I have a risk? If I did just 2 contracts there at 54, okay, it might cost me $200. If I do 10 contracts there, now I'm taking a lot of risk, but I just pick up 2. Then I pick up 8 more down here. If it hits this, I'm already up $300 now. So now I have a full 10. If it backs up against me, I still have that $300 cushion that's sitting there. And in this case, now it starts to tank and I'm making even more. Make sense? So this is the beauty of being able to recognize patterns and see them as they're forming. MGM, you'll see, is pretty much exactly the same. This one actually, Las Vegas Sands broke down quite a bit before MGM. And this is one thing last week, I think it was last week or the week before, in the Weekly Whispers was talking, and here we are, Las Vegas Sands and MGM. I don't know what they are there. I think they're two of the biggest, I believe, in that industry. And Las Vegas Sands had taken a beating, but MGM had not yet, which sometimes can be a clue. And sometimes you can use that and say, okay, this one in this industry, they're in the same business. They do the same thing. If one's already tanking and the other one isn't, then this one might catch up. And that was the thought process here. Created a trading plan. We have the head and shoulders pattern. It's taken a little less time to form. It's not quite as pretty as Las Vegas Sands, but it's still there. And sure enough, it's just been tanking. It's almost at the target today. I mean, as we speak, it's getting closer and closer. So those two are beautiful. This is the beauty of patterns. This is why I love them. And sometimes you got to wait. Sometimes you got to be patient. But then when they play out, and sometimes you get in, like Las Vegas Sands, get in, get stopped out. I think we did twice, actually. But then when it hits and it moves, it's fun. There's one. This is Monster. This is just not necessarily a pattern, except for it's just a little downtrend. But we saw this up in here, looking at the downtrend that we're in, and it finally just hit the target yesterday. This is one where scaling comes in handy, especially if you're in one of these days and you catch that 3 or 4 day move. Take out part of it, and then it rallies back up here and starts to dance and give you an indication that maybe it's getting weaker. Then you can reload the position and catch the rest of the move. Just a thought. I'm going to hustle through these so we can make Brenda happy. You give me all kinds. You're opening the door a lot today, Brenda. I love it. And we got a couple extra. I was a couple minutes late, so don't tell Lee. Shh. There's no Marvel. This is not a beautiful head and shoulders. We got this huge spike. I'm not sure why. This one I was a little skittish with because there was room. No, this wasn't it. That was a different one I was thinking of. There was somebody that was on buyout. This is a semiconductor. But you can see it broke the neckline there and rallied up and broke back above it. So I don't love this one. I didn't like the pattern to begin with, and we had earnings, and that's always challenging, especially when it's right around this situation. But we got down because of earnings. We rallied back up. Notice the volume. Huge volume on the earnings move. And then as it rallied those 4 days, the volume got lighter and lighter, which is an indication that the bulls are getting weaker. That is true, Brenda. Netflix, there's one for those of you that love these guys. And they've just been getting trashed. This is one we've been watching too. The head and shoulders formed back here. And actually this plan was based on that. It broke it for a day. These are the ones that are irritating, right? It breaks it for a day, and then it rallies back up, stops you out, and then it looks like it's going again. Then boom, pops back up, and then it rolls over. So we have basically 2 right shoulders, but it finally started to go a week and a half, 2 weeks ago. Huge down day, tons of volume. And boom, it's in good shape right now. Will it continue? I would expect it actually to pop back up a little bit because big moves like this usually have some kind of retracement. But who knows what the overall market's going to do. If the overall market continues to fall, then most things are going to go with it. So I'm prepared for this thing to pop back up. And this is another one that scaling would be good. In fact, I think yesterday I just pulled a piece of this out, if I remember right. I know I did that on several trades that have moved like this, and they're a quarter to halfway to the target. Because after a move like this, I expect it to retrace. So I take a piece of it out, and then if it rallies back up here, now I can reload that piece at a cheaper price. I bank some profit. God forbid it takes off to the upside big time and stops me out, and I take a loss. I have a smaller loss. If it rallies back up a little bit here, then I can re-enter the trade and have more profit potential. If it continues to fall, I'm still in the trade. So win-win-win. I'm in the best position I can be in. ON, I don't remember what this is. Oh, that was a flag pattern back there that failed. Yeah, that was on there. There's a little flag pattern. Right? Broke out, gave us an entry, and then stopped out. It's like, these are the ones that are frustrating, but this is the reason to use a stop, because obviously you're going to get destroyed right here if you don't stop out. And I've done that too many times to count. So learn from my lesson. Another inverted head and shoulders, another example of it. This is the beauty of patterns. This is why I love them. And you can see this one played out. The measured move was about 7 points. Oh, that's off a little bit, but should be over here. Actually, that's the crazy part right there. And then neckline's not perfect, but it actually not only went to it, but blasted right through it. Another reason to scale, right? If it's doing this and making a strong move like that, you only take half of it out, and then you got 45 all the way. You got another 3 points of profit. So, I remember this one. Y'all see it? All right, we're gonna. No, there's one more I want to look at. How many of you see that pattern? It's back here, and this is again. Oops, that's not what I wanted. This is where patterns in a flash came from. It was the frustration of having this happen to me frequently, where I'd see a pattern, and this is back in 2000, right? When I started, I read the books and started looking at charts and going, oh, look at that. Oh, there's a beautiful pattern. Look at it. Watch this. And then I'm like, well, I can't do anything about it because it was 6 months ago. That's where the flashcards came from. I was frustrated, so I had to train my eyes to see the patterns over here on the right side, because right here, and look at that. I mean, it literally, this is about as textbook as it gets. You actually have a head and shoulders inside of a head and shoulders. You got a left shoulder. You got a little miniature head and shoulders right here. That'd be, now I'm just curious. Just toying around a little bit, see, because this is the, so he didn't quite move the whole way. Well, at least it doesn't look like it, did it? Almost. But you can see this is the value of patterns. And again, getting back to like what we have, there's one more I'm going to show. Okay, that's the head and shoulders. This is why I love the head and shoulders. And you can see, I mean, it pretty much came down to the target and turned around and went up. This is one that happened recently, right? This is a bullish candidate. Symmetrical triangle. This is one we looked at in the Weekly Whispers a couple weeks ago. And it actually ran up and tagged the target and then turned over. Same concept as the head and shoulders, right? It's just a continuation pattern. We're in a bullish trend, consolidates a little bit, boom, it breaks out. Measured move is up here, goes up and hits it. Again, they don't happen 100% of the time. Here's Slimber J. There's a head and shoulders that didn't play out, didn't really even break the neckline. I don't know why these move sometimes, but Snowflake, this is another beautiful one back here. Head and shoulders that played out beautifully. I mean, it danced on the neckline quite a few times. It did give I don't know if it hit an entry point there or not, but either way, I mean, yeah, it did hit it and then stopped out, but then hits it again here and tanks. So you get stopped out once for $5 or $6, then you get back in a week later and make $18 over 3 or 4 weeks. So you lost 5, you made 18, you're still ahead $13. Taiwan Semi, this is another beautiful. I remember playing this. Beautiful head and shoulders. About as textbook as it gets. And it breaks the neckline, comes up, tags it again, and then drops from there. Again, entry point of 98, target of 91, $7.50 of profit with what, $2.50 of risk. And it didn't, well, if you waited for it to retrace, then it was beautiful, right? TDD, another one. Well, that was a double top, but it still played out beautifully. Warehouser, little miniature head and shoulders. This one created an entry point, then it stopped out, another entry point, and it's just in the last couple of days hit the target. And last one before we look at the cues, Brenda, inverted head and shoulders on Zion. I remember talking about this, but the banks, I wasn't too keen on the banks, but it did pop. I think it may have been earnings though, so no, I guess it wasn't. It did pop above and rallied. Actually, I guess it hit the target intraday. But this is an example. You can see the volume where it got heavy on the breakout to the upside. That's what we want to see on an inverted head and shoulders. And you've already seen the cues anyway, Brenda. So we looked at the NASDAQ. Did we not? And get rid of all those. Because the cues is nothing more than the NASDAQ, right? So it's going to look just like the NASDAQ. Oops. Adjust that up just a little bit, get in super tight. And this is where sometimes I get a little OCD. Sometimes I let it win. Now, it hasn't broken as much as the, whoops. SPX did, but yeah, there's the next major support level. Okay, there's a weekly chart. The next major support level is there about 333, and that's where the measure move comes just a little bit beyond it. So there's actually an inverted head and shoulders right there, which I don't like. When the neckline's that steep, I don't like it. But obviously, I mean, this gave us a clue that the market was done. The steep necklines are really not a huge thing, but at the same time, whoops, it was there. Oh man, what's going on here? How come I can't grab? There we go. I think I got it. There we go. Yeah, you can see, I mean, there's an inverted head and shoulders on the downside, and it went a little bit past the target, but the target was up here right where that would be support. But just the beauty of patterns. This is why I use them. And you go through 300 charts once a week, you start to see the different sectors like oil. Some oil stocks have gotten trashed in the last couple of weeks, which is weird because oil's been on a rally, right? It broke out of 80, it's run up to 91, 92. It's where's that right now? It's sitting right at 90, just barely above $90 right now. It's up, it's almost flat today. It's up 50 cents. But so yeah, which is likely to kick inflation back into gear, right? And oil's probably going to continue. It's had a big old blast off, big old break, huge break with lots of volume. So, but if we look at the spiders, I don't know if you follow the spiders, but which is essentially the SPX, right? And you can see same thing here, right? So we've broken the neckline just like we did in 08. But this is a huge break. The spiders is not, the SPX was a Maribozu almost. In other words, there's almost no shadow. So we gapped down. I mean, the bears had massive control yesterday. If we actually look at the SPX, and then I'll shut up. Sorry, Lee. We get way in here. So here's yesterday on the SPX. The bears are in total control. They gap it down. If you look in the upper left up here, and we put our mouse on top of the candle, yesterday's open was 43.7560. The high right next to it was 43.7560. The bears gapped it down and gave not an inch of room to the bears. The bears couldn't even tick it higher, even after a pretty sizable gap. That is huge. The bears are in total control, and they took it and just ran with it. And if you look at the low, well, the close was 43.30 exactly. The low was 43.2941. Whoops. They ticked it up 0.59 of a point. Right? It's a 4,300 point index. 0.59 is nothing. In other words, the bears had total control yesterday. They pretty much had total control the day before. And you can see the size of these candles. So you get not only those things coming in, and the sentiment has been shifting for the last few weeks. It's one thing I've been talking about in the Weekly Whispers. 2 or 3 months, the last 2 or 3 months, minus the last few weeks, the market's just been in this weird lull. The whole year has been kind of wonky, but the last 2 or 3 months, I was mostly on the sidelines, just waiting for some kind of signal, some kind of setup that said, you know what, we're headed south again. And over the last 2 or 3 weeks, it started to appear. And I've started to build positions. And now I'm in positions that I'm content with. There's ones I missed that I wish I would have gotten into. But now after yesterday, I mean, that break yesterday with a huge candle to the downside, this right here tells me that we're headed back south. How far and how fast it drops, that's the unknown. But I have very little doubt that we're going to continue down. Will we possibly rally back up here and close this window and tap that neckline? That wouldn't surprise me. It just depends on how much the bears want to keep it going. So here's the we'll do this real quick. These are the 4 major markets, right? And this is real time. This is my toss. The left-hand side are the 5-minute charts, the intraday charts. The right-hand side are the daily charts. It's not as, it's harder to look at for me when it's bigger. But you can see the necklines there. I have the necklines on all 4 of them. And yeah, because I have these 4 small ones up there just so I can glance at it. I have them set like that. Actually, I think they're easier to see that way. Maybe that's just because I'm used to it, but put them back where they go. So I know a lot of people don't want to hear the bearish side, but I'm not necessarily bearish. I mean, I'm bearish, but the reality is it's going to be what it's going to be, right? And I'd rather have my eyes wide open and be prepared and in position to take advantage of a crash if it's going to take place, or even a bear market, right? Let's hear a lot of, these proverbial bulls that are just like, nah, you don't want to be bearish. It's like, okay, whatever. Sorry, I want to profit when the market tanks. So it is what it is. I'm not gonna control it anyway. I just got to go with the flow. So I agree. There's nothing wrong with OCD, as long as it doesn't take over. And I've been in that position sometimes where I let it run my life. I got to control it, not let it control me. But where are they at today? Who's that? Thanks. Yeah, she is pretty awesome. Can you see her up there still? She's just hanging out on the router. She likes the heat. Oh, where's the SPX today? It's up 18 right now, 19. Well, we look at the spiders. That'll give us an idea, because this is an ETF that tracks it, right? It's about a tenth. So this is up $1.90, $1.80. So you just move the decimal 1 point, you have what the SPX is. So this is delayed by about 15 minutes, but it's right about there though. 43, 48, 43.50. So, all righty, I got to shut up because now I'm way over. I was 2 or 3 minutes late. Now I'm super late. So, any other real quick questions? Super quick, so I can let Lee go. All right, appreciate that, Brenda. Thank you. Happy trading is right. Long as this thing keeps on taking, I will be happily trading. But it's obvious, right? I'm on the bear side. I've been a bear for a couple years. You shift over and you jump fence once in a while when you have trends, over a few months, or you have a symmetrical triangle like on Shell, you have some kind of bullish thing show up that's a short-term indication, then you hop to the other side of the fence and play that side. But for the most part, I've been in the bear camp for 2 years, 2.5 years. So, and like I said, last year it was good. This year it's been a lot more challenging because I'm still bearish, but we've had a bullish trend, a quasi-bullish trend. It's not massive, but it's big enough where I wish I would have flipped a little sooner and got on the bullish side, but there wasn't any really clear signal saying that it's time to get bullish. There were some, and some that I missed. Welcome to trading, right? You step in the box, you swing at the bat, and sometimes you watch a pitch go by and it's a strike. Okay, so be it. It is what it is, right? You just got to get used to it. It's just the nature of the beast. So, all righty. Thanks for all coming and hanging out. You too, Helen. Appreciate it. Y'all have a great weekend. I was just about to say that, so beat me to the punch. All right. Y'all take care. God bless. Bye-bye.